Now let's look at the gold market, /GC. And we're going to look at the near term right in here and here. Now, I'm getting some emails and people writing to me, well, you know, a flight to safety should be going on. You talked about gold going up to 1725, 1735 in the near term, though it got a rally and then stopped. And what's that all about? Well, first of all, we did get up into near resistance areas. That is true. If you look back at other periods of flight to cash, the one that I could think about clearly, because I traded it so clearly, was 1987. And gold did well in the initial stages of that big crash, but then did very, very poorly after that as the deflationary forces hurt gold. Gold, silver, the other metals. Right now, gold is outperforming everything else. What our projection in here is that it might still be able to get up to those resistance levels at 17.25, 1735. But there's a correction due here and a declining phase into May in most of this complex, the metals complex. So we won't be surprised if gold does struggle, and then after that, way out over here, when the government is print, doing everything they can to save the collapse, that the gold market soars on the upside and gets up to, well, much higher levels. And you could look at our big picture analysis last week to see what those are. For the near term, you could see what gold did today, and that is tried to rally and then pulled back. There's a support buy zone right in here. You could see the minor patterns, and the blue ones is what we're looking at right in here. The dashed ones are silver, and I know that's confusing if you're not familiar with my charts. This is the dominant gold pattern right over here. So we're in a rally phase here and a rally phase here, but this looks like it's topping to me and likely to roll over and give you a correction. I wouldn't be surprised to see gold pull down to 1635 in this flight to cash period that we're in right now. And this is a buy zone in here, down to about 1618 right there. And we think that gold could be range bound in here between the low 1700s and the low 1600s while it's in a corrective phase. So that's a look at the weekly on the left, and which looks like it will be chopping around and then correcting into May. This depth of this decline right over here doesn't have to be that strong. We'll be updating that. This is kind of a natural movement that we see here. And you can see that if it's not rallying today, well, then when will it be? It's going to have to be when it's very clear that the government is building its balance sheet in a massive way. And I think that might be clear out into the springtime. So right now we're going to look for this range-bound condition in the gold market.